Hello and welcome to our economic outlook. This is our promoted markets. Let's see what happened last week and what we are going to expect from the week ahead. Last week, in a short review, we can say that mostly focus was on the market focus was on the PMI numbers and then US GDP and personal income. Week started with not such a good news with the PMI numbers mostly missing estimates. Not mostly, all of them are actually missing the estimate in Eurozone and in United States. While they were better than estimate, they missed they somehow slowed from the previous month. Generally, we started with weaker economic activity outlook from most developed and developing economies. Later on Tuesday, this somehow continued with CB consumer confidence falling to 98.7 in the United States from upward revised number of 105.6, which we had in August. It was in a primary number, it was 103.3, which revised up to 105.6. But generally, the data which we added from other economies, such as German current asset and German current business climate, and from not from Germany, not from Germany and Europe generally, economic condition was not such a good, and outlook for the next 6 months also was negative. I mean, not negative, but less than estimates and weaker than previous estimates. Later on Wednesday, we had the new home sales in the United States, which we saw that the new home sales also fell 4.7% in August, which was increased by 10.3% in July, which means also the building permits also from 146 increased to 1,406 increased to 1,470, but it was less than 1,475,000 units, which was expected in the market. But that was not the end. Thursday, we had a much positive data from United States economy, where we had the initial jobless claims falling to 218,000 from 222K, which we had previous week before that. That shows that the labor market is not good as well. It's not such it doesn't have a terrible condition. Yeah, it's not such a good, it doesn't have such a good condition which it had a previous months, but condition is fine. Initial jobless claims as at 218,000 is somehow brilliant. It's not just a good. Also, the GDP increased by 3% in the second quarter. GDP price also 2.5%, very low. It was fine in price index. Well, when you're talking, it's fine and acceptable data. And also, the core PC price index in the second quarter increased by 2.8%, which was in line with estimates in the previous quarter. So generally, the data which we had on Thursday, they confirmed that the labor market is fine and GDP is growing with the acceptable pace in in August and in September in the second quarter. Sorry, the second quarter. This is what we had on Thursday, but later on Friday, market get more motivated with PC price index and PC income and personal income and spending. We saw that in the United States, the personal income is eased from previous months to like the personal income and spending shows that how much people they get the money, they earn money, and how much they are ready to spend from their earned money. Personal spending increased fell to 0.2% from 0.5%, which we had months before that, while the income also decreased. So generally, what we saw that the employed workers in the United States they have less income, and so they are spending less as well. In line with this estimate, core PC price index, which is the Federal Reserve preferred inflation number, increased to 2.7% from 2.6% in annual base. It was in line with estimates, so it had no surprise. But on the monthly scale, on the monthly basis, inflation, with the core personal inflation increased only 0.1%, much less than 0.2% estimates in the previous month. The headline PCE price index also increased by 0.1%, less than 0.2% estimates, and headline PCE price index fell to 2.2% from previous 2.5%. Generally, what we can say that the US economy had a better performance than expected in the second quarter. Labor market shows that with 218,000 initial jobless claims, the condition is not such a bad. Actually, initial jobless claims were amazing, brilliant, and also in addition, the inflation is controlled somehow. So that confirms a little bit more increased expectation for more dovish policies, which counts finally to 50 basis point rate cut expectation in FOMC, with the CME Group FedWatch tools to increase to more than 53%, and 25 basis point rate cut, which is very normal to be seen, fell to less than 47%. So now we can say that the market expected another 50 basis point rate cut after surprise of 50 basis point rate cut that we had last week, 2 weeks ago. So generally, these data means that we should be more care about the next data to understand what Federal Reserve is going to decide in the next meetings, which is going to be November 7th. That was last week, and in the week ahead, we have too much data from most economies. It's not like last week. So last week we had mostly data from Eurozone and the United States, and from Eurozone also we had only mostly PMI numbers. But in the week ahead, from China, from United Kingdom, from Europe, and from United States, we will have a very big week. In United States, that focus will be on NFP numbers, which we will have on Friday. But before that, Monday will be very light day for United States. But Tuesday we will have ISM manufacturing PMIs, which is very important. We know that it will show how U.S. economy was performing last month. In September, we are expecting to see that ISM manufacturing PMI to increase to 47.6 from 47.2 in August. GLT is supposed to have a little bit more ease from 7,673,000 to 7,640,000. From 73,000 to 40,000, which means that we have less opportunities for the labor market, for the laborers in the market. But it's not only that which we are expecting from the U.S. labor market. On Wednesday, we will have ADP non-farm employment change, which is expected to show that 124K newly created job, which is the data they are creating automatically. Before we had a more focus on these numbers, now mostly the market is avoiding that because just the 2 days after that, and actually not just 2 days, the next day we will have more numbers from the labor market on Thursday. As always, we have initial jobless claims, but most focus will be on Friday's NFP numbers. So that's why the ADP numbers will not be so much in focus. Friday, we will have NFP numbers, which we are expecting to see only 144K newly created job and hirings in the non-farm payrolls. That means that the economy is hiring less job compared to the previous months, like 2 or 3 months before. But still, we're expecting to see unemployment rate to stay unchanged at 4.2%, and average income to increase by 0.3% in September on a monthly base. But in the annual base, also we are expecting to see 3.8%, which we had in it, I guess, to be repeated in September as well. Generally, the data are not going to show us surprise, but still on Thursday, day before that, we will have ISM surveys. They are very important. They will show us how U.S. economy just like performing in the previous month. Just make sure that you have to follow ISM numbers as well. We have a market PMI numbers as well. The market also will publish its PMI number, which we are generally expecting to see that both ISM and market numbers for the for the PMIs, we are expecting to see a little bit weaker number for both of them. Yeah, they're expecting this ISM non-manufacturing PMI to increase from 51.1 to 51.6, but I do expect a little bit lower numbers. So generally, I do expect to see a weaker economic activities in September. So for the PMI numbers, I'm not such a positive for the week ahead. For labor market, I'm somehow a little bit positive. I expect to see a little bit more hirings than the overall market expectations, but less income, lower income, and also the lower PMIs, just like a little bit easy in the PMI numbers. This is what I do expect to see in a week ahead in the United States. Factory orders expected to increase only 0.1%, less than the 5% increase which we had the previous month, which actually was a surprise, a shock in the market. But this month we're expecting to see only 0.1% increase in the factory orders. In other economies, in China, Monday will be very important with the PMI numbers. In China, unlike in the United States, in China, I do expect to see after 3 months of bigger number, I do expect to see a little bit positive number in China, to see both manufacturing and service sector activities to increase with the PMI numbers headline and Saxon PMI numbers in both sectors, manufacturing and non-manufacturing sector, to increase a little bit. We know that the last week, the Chinese Central Bank, People's Bank of China, PBOC, had its biggest ever stimulus since Corona pandemic that we had. Now, just like the central bank in China, they eased the RRR reserve ratio for new loans. Also, they cut down the inflation, the interest rates for many small loans, especially in a housing market. They also the down payment for buying the second house, they decreased it to 15% from the previous 25%, if I don't mistake. So all these activities and all the stimulus that the central bank in China had supported a little bit market, and we do expect to see a little bit more support, but still it doesn't change our general outlook for weaker economic growth than Chinese government expected at the beginning of the year. The Chinese government is expecting 5% GDP growth for 2024. So far, with the numbers published, we do expect to see less than 4.5% GDP growth in China in this year. So, I mean, these data which we are expecting to be a little bit positive, it will not change our general outlook about the Chinese economy. In United Kingdom, we will have the GDP numbers at Monday, which is very important to see how the GDP increase in United Kingdom. We do not expect to see any surprise in GDP numbers to confirm the 0.6% on the quarterly and annual base of 0.9% GDP growth. We do expect to see these initial numbers to be confirmed. These data means that the central bank in United Kingdom will cut another 25 basis points after holding the current rates in September. In October, we will not have a BOE meeting. In November, I forgot, but in November, which day in November, I don't know. I forget, I think 12 or something like that. But in November meeting, BOE will cut the rates by 25 basis points, especially if you see these numbers to be confirmed. In Japan also, we will have very big week with the Tonkin big manufacturing and large manufacturing index in the third quarter. We do expect to see a little bit better than previous quarters number, better economic growth in Japan, which is the effect of the ultra dovish policies that the central bank in Japan had. But still, with these numbers, we hope the Japanese central bank to decide about at least one rate cut before year end. In other economies in Europe, we will have very important inflation numbers and labor market data. Inflation numbers will be published on Tuesday, where we are expecting to see the headline CPI to falling to 1.9% from 2.2% we had in previous months, and core CPI, core inflation, to fall to 2.7% from 2.8% we had in August. Unemployment, which will publish on Wednesday in Eurozone, is expected to stay unchanged, remains at 6.4%. OPEC meeting also on Wednesday will be very important for energy markets. I will talk about the energy market on the chart when we are going to check that. Other data, we talked already about that. Let's go and see the charts and see what we had. Generally, we can head with the PMI. Also, we shouldn't forget about the PMI numbers, the market PMI numbers on Friday from European economies, which I told you. In Europe, we are not expecting to see brilliant numbers in the September as well. If we're going to check the charts, let's start the charts with US dollar index. US dollar index was mostly flat during the last week, but on a Friday, after weaker than expected PCE price, that PCE price index, personal income, and weaker personal spending, lower personal spending, US dollar fell a little bit, lost a little bit of its strength, but still generally it's increased. It closed above 100 mark for the week ahead, with the general the geopolitical tension increase after Israel killed Hamas leader. They killed Hezbollah leader, so that means Hamas leader actually. That's increased the more tensions in the market, which means in the week ahead the US dollar safe haven demand can increase a little bit. So after weaker data which we had, and increase the pressure on US dollar index, week ahead with the more demand for its safe haven, most probably we'll have more consolidated condition, and most probably US dollar can slowly confirm itself around these levels between 100 and 101, and slowly start to increase before Friday. But the main movement, I mean the closing of the week, will depend on the NFP numbers. If we have a generally better than expected NFP numbers, then the US dollar US dollar index can increase at the end of the week. But vice versa, if we have a weaker than expected NFP numbers, the stock market can increase a little bit, and US dollar can get more pressure as market thinks, as market will believe that the central bank will need more dovish policies to support the economy with the weaker labor data. And the stock markets, general data which we had, especially the Thursday's GDP number, which confirmed the US economy increased better than its previous estimates, Intel estimates in the second quarter, showed that the economy is somehow strong in the United States. So that put a little bit more slowly pressure on the stock markets to say that, okay, that's enough, and despite more than 53% possibility of another 50 raise cut in November, we are not counting too much on that. So that was a market reaction, which means that a little bit the stock market paused about S&P 500 about 5,700. For the week ahead, we're expecting to see a little bit better labor market data, which means that most probably stock market will get affected from that and will hold these levels with slightly pressure on the stock market. So positive days we're expecting for US dollar, and somehow slightly negative days we will have for stock market. This is the general expectation. On the gold, something like that, with the slowly increase in oil in US dollar index, and also some more profit taking in these levels from the gold market as well. Generally, we're expecting to see more consolidated days for the gold, and most probably gold will continue to try to confirm these levels before start another bull run. But before that, gold needs to confirm these levels, actually these prices, and say that confirm that it's actually these prices are kind of, we can say, how we can say that these prices they are not bubbles, they are real price and the real value of the gold. So most probably the gold will think more around 2,600, 2,620 levels, around these levels, before it continues to go further, or it generally takes the next trend, which can be positive or the negative. But before any next trends, gold will need more confirmation around 2,600, 2,620, these levels before next movement, as I mentioned. For oil, Wednesday we will have an OPEC meeting, but generally what we are expecting to see, we do expect to see that with the general tensions, the geopolitical tensions, we need to see higher prices. But on other hand, OPEC meeting will confirm, will continue. I mean, will tell us what we should expect from the oil, from the market. Market expecting to see the we know that the OPEC Plus, they had a production cut for the second quarter. Now we're expecting to see, will they continue this production cut for the next quarter, for the third quarter as well, which is starting this week? Will they continue the production cut or till end of the year, or they are going to change their plan? The market's very focused, will be focused mostly on OPEC upcoming plans. Generally, we are expecting to see again the oil to increase more than $69, between $69 and $71 is expected the price for the next week, as geopolitical tension also increase. This is general our expectation and outlook for the week ahead. If you have any other question, please do not hesitate to write down in the comment section. I will try to get back to you as soon as I can. Have a good time. Bye-bye.